What exactly is Reg A plus? This is a little bit of a technical deal. May not apply to most people in real estate, but it's a fascinating discussion, and it's something that's worth spending just a couple of minutes on. In 2012, President Obama signed the Jobs Act, the Jumpstart Our Business Act of 2012. And when he did that, they put in motion all these different crowdfunding opportunities. And there's basically three big ways that crowdfunding works. The first is what we mostly focus on, which is this Title II stuff. You might have heard of 506B and C. So that's really kind of working with accredited and non-accredited investors. And that's the ability to advertise. That's a whole separate discussion. The second kind is this crowdfunding for all. So all people could get involved in crowdfunding, put a couple $1,000s in, very small limits. And they kind of thought that, that would be a good idea. And, it hasn't taken off really at all. The third kind is called a mini public offering. A mini public offering. So you could raise up to $50 million without going through all the enormous headache of a full-blown registration and an initial public offering, which can cost $1 million, probably even more in a lot of cases. So for companies that wanted to raise modest amounts of money, modest being $50 million or up to that amount, they could do so with limited oversight, less reporting, make it a little bit easier. They could work with all kinds of investors. And that's called Reg A plus. There was an old regulation called Reg A. They revised it. They made it a little better. There's a number of things that they changed out of the scope of this discussion, but they made it simpler for people to access capital and the public markets. Now, a lot of people have tried to do this, and some have been wildly successful, some have not. The ones that have been wildly successful tend to have some kind of an affinity of some kind where all the people get excited about something and they want to be part of it. So when the Hard Rock Hotel went public, I think doing something similar to this, there was some crowdfunding activity. They gave away free room nights. They gave away this or that. There have been a couple of these that have been really exciting. There was a car maker that collected deposits and other kinds of things, and then offered stock to the people who made deposits on this new hybrid kind of car that was going to go. As soon as the stock was subscribed, it went public, and the deal got done. So it's a very fascinating way to do this. What hasn't been enormously successful is the ability to just raise money for simple deals like an apartment or a real estate fund. Not to say it couldn't be done, but for the most part, it's really hard to get people excited about this. It's really hard to get people wound up. And as opposed to a traditional initial public offering where you have a brokerage network that's distributing the shares to their clients, and they're pushing the shares and they're raising the money, this doesn't have anything. So you're stuck with Facebook and advertisements and email, which makes it a little bit less expensive. And I say a little bit, not enormously less expensive, because instead of spending 5 or 10 or 8% for the broker dealers, you're spending 5 or 6% for advertising. And you don't have anybody selling these securities. You just have the ability to market by blasting out emails and advertisements and things like that. And so you really have to have something that's interesting, captivating, and powerful, or people are not going to subscribe of their own volition. They're just not going to do it because they need to be pushed. And securities, it's well known, are sold, not bought. And if you don't have somebody that's pushing this into the hands of the investors, it's much more difficult to pull off. But if you can do something that requires Reg A plus, which allows for non-accrediteds as well as accrediteds, and then the stock floats on the stock market so they can buy and sell their securities on the secondary market, the stock market, after the initial public offering, then this is a great offer. It's a great opportunity. And I would go out and, think about it. It's not inexpensive. Probably the strategy that I would use is do a 506B or a C, raise your first couple $1 million, get the thing going, whatever it is that you're working on, and then peel off a couple $100,000 to do your Reg A plus offering, because it's going to cost at least that much to get it up and running with all the legal work. And it's not $1 million, but it's also not free. So it's probably going to be in the $200,000 to $400,000 range to get all this done. Plus, there'll be more money for advertising that you're paying out. Figure at least 5% of your total offering cost. So this is not inexpensive, but it's probably not the first step that you would do either. if you want to do this, you probably need to do at least 1 or 2 rounds using 506 B or C, get your deal up and running, and then you'll have the money to do the Reg A Plus. Do it the right way, lay it out just perfectly the way you want it, and then you'll be in the business, rolling along. And as I always say, this is a great business. Just go out and stake your claim.